So good morning, everyone. So the first question that I'm going to ask you actually, why we are here. We are here not for the competition. We are here not for the competitions. So look at this. This is the environment that you are living at now. Do you think you want to breathe this kind of air? Do you think you want to have your neighborhood to be this kind of land? That's the question I'm asking. Do you think the recycling program is successful now? I don't think so. If it's successful, why they still have this? So we, plastic to paper team, here to provide you with the solutions. In the next 15 minutes or so, myself, Johnny, and my colleague, Calvin, going to bring you through are the problems, the solutions, and the impact on the financials and the environments. Of course, we are going to wrap it up with the conclusions. So what is actually the problem? Imagine, there are about 50 million tons of plastic produced annually. What they do after you don't use it anymore? Yeah, you can recycle that. Right, one time, you can use that probably for a chair. 2 times, you can use that for the plastic bag. How about 10 times? 20 times? At one point, it will become useless. Why? Because it's going to be very weak. That's what we call the lower grade scrap. What are you going to do with that? There are only 2 ways. Either you bury it, or you burn it. That's when you have the problem. We are here not to change you, to ask you to change your lifestyle. You still need to use plastics. But we have a problem because we cannot control it. That's why we have the dilemma. So what are we bringing in? These plastics, who are already useless, becoming the low-grade scrap, what we're going to do is, we're going to convert that into the biodegradable plastic. And these things, after we have this film, you can just think of anything. You can make toilet paper, you can make diapers. I can show you. This is one example of the things that we produce. You can put that in your face. Yeah. The judges hold some. And the unique business, I mean, the best thing that we have over here is that this thing is just going to degrade in a few weeks' time. It's very good for your environment. So our business model is very unique because we will have a very low capital expenditure. This is where we are. We have the proprietary technology where we'll be able to have a plant to do all the pre-mixing. And this pre-mixing is going to be combined with the low-grade scrap, where it's going to be outsourced to the compounders to make the resin. And this resin, we're just going to subcontract to the film maker. They'll just make the biodegradable film for us. I mean, then after that, we'll just make the alliance with the FMCG manufacturers. That's when we can make all the paper products that you can see in the supermarket. So the question would be, where should we start? Logically, we'll start at US for the next 5 years. After that, we'll go to Canada and Europe. Why? Simple reasons. US is the highest usage of the toilet paper. And all these regions are proven to be eco-friendly customers. And they have a very decent growth at about 6%. How are we going to do that? Promotion. We'll go to the conferences, the green conferences. We'll go to the paper trade shows. What are we going to do there? We're going to talk to them. We're going to do the small-scale sales program with the FMCG. We'll make sure they buy our ideas. That's when we can leverage our marketing, our distribution channels. After we make the business visibility with them, that is when we are going to form the strategic alliance with the FMCG. And that is when we are going to capture the market. So if I'm just looking at the current situation, competition, I don't think there's anyone. In the next few years, of course. Why? Maybe people will be able to imitate our products. But these products, whoever holding it now, tear it out. It feels like a toilet paper, but tear it. You'll see 3 layers. 3 layers of plastics. In order for you to get this end product, it takes you about 2 to 3 years of your R&D. That is actually when we say that we have the first mover advantage. We have a low cost, and of course in the long run we'll be able to build up our company brand and also our IP protection. So just quickly introducing the people. Our founders unable to join us today. Lionel, myself, Johnny, Chris, and Kelvin. Who are we actually? We are people who have the different background. Most of us own MBAs. We have engineers, we have economists, we have very different background. And we have over 80 patents filed. So for the next slides, I'm going to pass to my colleague, Kelvin. Thank you.
Thank you, Johnny. Now, what exactly is our revenue model going to be? What we're proposing is a cost-plus revenue model, specifically a 20% markup. It is simple to administer. It provides adequate insurance against unexpected costs, and at almost $200 discount, $200 per ton discount to conventional toilet paper, we think it's very competitive in price. Now, are the economics compelling to the FMCG companies? We think so. Gross margins range for FMCGs from 11.5% to about 45%. And the reason for the wide range is that, if we purchase the important PLA non-woven 12 GSM coating film at a cost of $2,500 instead of our premium of $4,500, and yet not compromise too much on quality, we will achieve 45% gross margins for the FMCG companies, which we don't think is a bad proposition. Now, how does this factor into our financial projections for the next 5 years? To begin with, we think that our initial sales program will take at least 1 year to initiate. Customer feedback will have to take some time, and large-scale production will probably only ramp up in 2011. Of course, revenue projections are at a guess at best, but we think that a market share capture of about 0.25% of toilet paper segment in 2011 and going up to 1% in 2014 is fairly conservative. And at 2014, you will see net margins of 10 million and base of revenue of about 84 million. Now, how does this compare with respect to, how does our normalized net margins of 10.7%, excluding the loss-making first year, compare to our competitive peer group? Now, segment net income figures are not readily available, so we take operating profit before tax margins, and we can see that on an apples-to-apples comparison, plastic to paper here is certainly within the mid-range of the peer group, and so it gives us a good indication that we're not too far off in our estimates. And break-even would be in 2 years with a return on investment of about 68% per annum with 3 times equity multiple. With respect to the environment, we really see 2 primary social impacts that will make a positive contribution. The first one is a reduction in greenhouse gas emissions, which get emitted from landfill disposals and upon incineration of non-biodegradable plastic waste. Now, it's important to factor in our net carbon impact, the calculation and the potential to recover this energy, because not all the gas will be released into the atmosphere. Some of this gas can actually be extracted, collected, and usually used for energy recovery purposes such as electricity generation. So it's important to put that into consideration. So thankfully, we rely on the published findings of the study done exactly this carbon accounting, and in summary, over the course of 5 years, we estimate a reduction of about 27,000 tons of net carbon emissions. Now, what does this mean in terms of monetary value? For that, we take the last 3 years estimate, last 3 years average price of a carbon financial instrument traded on both the Chicago Climate Exchange and the European Climate Exchange to see what an exchange member would be willing to pay to emit 1 ton of CO2 equivalent gas. And unsurprisingly, the Chicago Climate Exchange members are willing to pay less, simply because it's a voluntary exchange and it's not bound by the Kyoto Protocol. And the next environment impact is avoided deforestation that would have occurred had we produced conventional toilet paper. Now, we obtain estimates of what our production of toilet paper would mean in terms of adult trees and as well as forest hectares based on fairly conservative and fairly standard toilet paper weight estimates as well as forest density studies that were done on the Canadian boreal forest region, which incidentally is also the primary source for virgin wood pulp by Kimberly-Clark. And all in all, we estimate to save more than 700,000 adult trees over 5 years. Now, what does this mean? Put that into perspective, it's also the same number of trees found in the metropolitan San Francisco area. Interesting. At present, as you can see, we have a working prototype, and we are looking to raise funds for to execute our plan. In a crucial first year, we hope to demonstrate the viability of our product to the FMCG companies and the end users, register our company, and put in place our premix facility and equipment, specifically in Singapore. In year 3, we will achieve break-even and as well get successful approvals for our defensive patents that we will build around our premix. And beyond 5 years, we will then look into a regional expansion into Canada, Europe, and even Asia Pacific, and into other products other than toilet paper. And finally, a probable exit strategy would be one, to sell out to an external investor, and more likely an acquisition by our partner FMCG company. Oops. In terms of what's required for funds, require 3 million over the course of 2 years, but not all is required to begin with. In fact, we only need 850,000 to start, and that will cover various administrative expenses such as employee compensation and contingency expense, as well as the bulk of the expense would be in the premix facility and equipment. And upon securing a deal worth 750 tons to initiate our small sales program, we require another 925,000, which is to cover raw material costs and production. And upon securing a longer-term contract, we intensify our R&D initiatives, and we will estimate a requirement of about 1.2 million, but it won't all come in one shot. And I'd just like to end off with a nod to several of the government initiatives, especially in Singapore, that we can potentially take advantage of. One that springs to mind is Spring Singapore, and it's a dollar funding matching program that we can potentially take advantage.
All right, so what have you heard so far? The recycling program is not that successful, I guess. They are not really solving the long-term issue. We plastic to paper here, solving the long-term problem issue. There are huge market potentials, significant ROI. We can solve environmental problem. And all this, we back it up with a strong management team with a diverse background. So what are you waiting for? Together we can make this to be reality. Thank you.